If you made $100,000 as a freelancer in 2025, you're about to pay less in taxes in 2026 than you think. But here's the catch. Most freelancers don't know how the new brackets work and they're leaving thousands on the table. The IRS just released the 2026 tax brackets, and if you're self-employed, this changes everything. Let's break it down. Welcome to Tax and Tech Explained, where we help US freelancers, digital nomads, and AI entrepreneurs understand the laws behind their income. Today, we're diving into the 2026 tax brackets. What changed? Who benefits? And more importantly, what should you do about it? By the end of this video, you'll know exactly how much you owe, how to calculate it, and how to legally reduce your tax bill. Let's get into it. Every year, the IRS adjusts tax brackets for inflation. It's called indexing. In 2026, the brackets shifted upward by about 2.8%, which means you can earn more before getting pushed into a higher tax rate. Now, why does this matter for freelancers? Unlike W-2 employees, freelancers pay self-employment tax on top of income tax. That's an extra 15.3% for Social Security and Medicare. So when the brackets change, it doesn't just affect your federal income tax, it changes your entire tax strategy. And here's the kicker. With AI startups, crypto income, and remote work exploding in 2025, the IRS is watching freelancer income closer than ever. The tax law didn't change, but the numbers did. And if you don't adjust, you're overpaying. Let's start with the numbers. For single filers in 2026, 10% on income up to $11,925, 12% on income from $11,926 to $48,475, 22% on income from $48,476 to $103,350, 24% on income from $103,351 to $197,300. For married filing jointly, double most of those. Now, here's what most people get wrong. Tax brackets are marginal. That means if you earn $50,000, you don't pay 22% on everything. You pay 10% on the first chunk, 12% on the next, and 22% only on the amount over $48,475. This is huge because once you understand this, you stop fearing higher income. As a freelancer, you're taxed on net profit, revenue minus deductions. So if you made $100,000 but had $30,000 in business expenses, you're only taxed on $70,000. But here's the trap. You also owe self-employment tax. That's 15.3% on your net profit before income tax even kicks in. The good news? You can deduct half of that self-employment tax from your taxable income. It's called the self-employment tax deduction, and it's automatic. So if you paid $10,000 in self-employment tax, you reduce your taxable income by $5,000. This is where the 2026 brackets help. Because that extra breathing room means more of your income stays in the lower brackets, even after deductions. In 2026, the standard deduction rose to $15,000 for single filers and $30,000 for married filing jointly. This is huge for freelancers who don't itemize. Let's say you're single and earn $60,000 in net profit. You subtract the $15,000 standard deduction, so you're taxed on $45,000. That keeps you mostly in the 12% bracket, which is way better than the 22% bracket you'd hit without the deduction. And if you're married filing jointly with $120,000 in combined income, that $30,000 deduction drops you down significantly. Bottom line, the standard deduction is your friend. Here's the part that trips up new freelancers. You don't pay taxes once a year. You pay quarterly. The IRS wants their cut as you earn it. So every quarter, April, June, September, and January, you need to estimate and pay. If you underpay, you get hit with penalties. The 2026 brackets don't change this rule, but they do change your calculations. Use the IRS Form 1040-ES to estimate. And if your income fluctuates, hello crypto and AI entrepreneurs, use the annualized income installment method to avoid overpaying early in a year. Let's hit 5 key facts about the 2026 tax law and freelancer income. Fact 1. The Tax Cuts and Jobs Act is set to expire in 2025, but Congress may extend it, which would keep the current bracket structure. If it expires, brackets could increase in 2027. Watch this closely. Fact 2. The IRS increased audit rates for high earners in 2025. If you're making over $400,000, expect more scrutiny, especially on crypto and AI income. Fact 3. Crypto income is taxed as ordinary income if you're paid in it. So if you're a freelancer accepting Bitcoin, it's treated like cash the moment you receive it. Fact 4. The qualified business income deduction still exists in 2026. If you're eligible, you can deduct up to 20% of your business income. That's massive. Fact 5. The IRS now requires gig platforms like Venmo, PayPal, Upwork to report earnings over $5,000 via Form 1099-K. No more flying under the radar. Here's what you need to do right now. 1. Recalculate your quarterly estimated taxes. Use the 2026 brackets and the new standard deduction. Don't overpay, but don't underpay either. 2. Maximize deductions. Home office, software, equipment, health insurance if you're self-employed, track everything. 3. Consider an S-Corp election. If you're making over $80,000, this could save you thousands in self-employment tax. Talk to a CPA. 4. Open a SEP IRA or solo 401k. You can contribute up to $69,000 in 2026 and reduce your taxable income massively. This isn't about dodging taxes. It's about paying what you owe and not a dollar more. So there it is, the 2026 tax brackets, decoded for freelancers. The law didn't change, but the numbers did. And if you adjust your strategy now, you'll keep more of what you earn. If this helped you understand the law behind your income, hit subscribe, because smart money needs smart rules. Drop a comment if you want us to cover crypto taxes, AI startup regulations, or digital nomad tax strategies next. See you in the next one.